Join me as I try to turn a profit through crypto arbitrage while keeping the conversation light and fun about all things cryptocurrency. Crypto arbitrage, it's a hot topic in the cryptocurrency world and for good reason. Essentially, it's the process of taking advantage of price differences between different exchanges or markets to turn a profit. Sounds simple, right? But trust me, it's not as straightforward as it seems. There are a lot of moving parts involved, and if you're not careful, you could end up losing money instead of making it. But when done correctly, crypto arbitrage can be an incredibly lucrative strategy. And that's exactly what we're going to dive into today. So buckle up, because we're about to explore the world of crypto arbitrage and see if we can turn a profit while having a little fun along the way. Price volatility, that's one of the biggest challenges traders face in the crypto market. One minute it's up, the next it's down, and if you're not quick on your feet, you could miss out on a great opportunity. And speaking of speed, transaction times can be a real issue too. You see, when you're trying to take advantage of a price difference, every second counts. You need to be able to move quickly, or else you'll get left behind. And that's not all. The crypto market is open 24/7, which means you need to be constantly on the lookout for opportunities. It's not just about buying low and selling high, there are so many other factors at play. You need to have a deep understanding of the market, you need to be able to analyze data quickly, and you need to have a solid strategy in place. And then there's the issue of liquidity. If you're trying to make a trade on a small exchange, you might find that there just isn't enough liquidity to make it happen. And that's a real problem. But even with all these challenges, many traders are finding success through crypto arbitrage. So how do they do it? Well, that's what we're going to explore next. There are a few different types of arbitrage opportunities out there, and each one requires a unique approach. Let's start with spatial arbitrage. This is when you take advantage of price differences between different exchanges. For example, let's say you notice that Bitcoin is selling for $10,000 on one exchange, but it's only selling for $9,500 on another. You could buy it on the cheaper exchange, and then sell it on the more expensive one, pocketing the difference as profit. Triangular arbitrage is another type of opportunity. This is when you take advantage of price differences between different currency pairs. Let's say you notice that the price of Bitcoin is higher on one exchange when compared to the US dollar, but lower when compared to the euro. You could buy Bitcoin with euros on the cheaper exchange, then sell it for US dollars on the more expensive one, and then use those dollars to buy back euros, pocketing the difference as profit. It's a complex strategy, but it can be very lucrative. Statistical arbitrage is another type of opportunity. This is when you use statistical models to identify mispricings in the market. For example, let's say you notice that the price of Ethereum is higher on one exchange compared to another, but your model says it should be lower. You could short the more expensive exchange, and then buy it on the cheaper one, waiting for the price to correct itself. Again, it's a complex strategy, but it can be very effective. And then there are cross-border arbitrage opportunities. This is when you take advantage of price differences between different countries. For example, let's say you notice that the price of Bitcoin is higher in Japan compared to the US. You could buy it in the US, and then sell it in Japan, pocketing the difference as profit. Of course, this type of arbitrage requires a lot of knowledge about different countries' regulations and laws. Another type of arbitrage is risk arbitrage. This is when you take advantage of price differences between different asset classes. For example, let's say you notice that the price of a Bitcoin futures contract is higher than the actual price of Bitcoin. You could short the futures contract, and then buy the actual Bitcoin, waiting for the prices to converge. Again, it's a complex strategy, but it can be very lucrative. And finally, there's merger arbitrage. This is when you take advantage of price differences between two companies that are about to merge. For example, let's say you notice that the price of one company's stock is higher than the other company's stock, even though they're about to merge. You could buy the cheaper stock, and then sell the more expensive one, pocketing the difference as profit. Of course, this type of arbitrage requires a lot of knowledge about the companies involved in the merger process. Now, I know what you're thinking, all of these strategies sound great, but how do I actually make them work? Well, that's a great question. Let me tell you about a guy who successfully executed a crypto arbitrage strategy. His name is Alex, and he's a professional trader. He's been in the game for years, and he's made a small fortune through crypto arbitrage. Alex's strategy was to focus on spatial arbitrage, taking advantage of price differences between different exchanges. He spent hours upon hours analyzing data, looking for opportunities to strike. And when he found one, he didn't hesitate. He would jump on it quickly, making the trade before the price could correct itself. It wasn't always easy, and there were times when he lost money, but he didn't give up. He kept at it, honing his skills and perfecting his strategy. And in the end, it paid off big time. Alex was able to turn a substantial profit through crypto arbitrage, and he's living proof that it can be done. So what can we learn from Alex's success story? First and foremost, we need to be patient and persistent. Crypto arbitrage isn't a get-rich-quick scheme, it takes time and effort to make it work. We also need to be constantly learning, staying up to date with the latest market trends and regulatory changes. And finally, we need to be willing to take calculated risks, trusting our instincts and our research. So there you have it, folks, that's the lowdown on crypto arbitrage. It's not easy, but it can be incredibly lucrative if you're willing to put in the work. Thanks for joining me on this journey into the world of crypto arbitrage. I hope you learned something new and valuable, and I hope you're as excited as I am to start exploring this strategy further. If you have any experiences with crypto arbitrage, I'd love to hear about them in the comments below. And don't forget to check out my other videos for more insights on cryptocurrency trading. Peace out.